Hi there, traders. This is Brad Gilbert with the FX Market Insight for Wednesday, the 24th of March. Right, as we come out of that North American session, big risk-off sentiment in the market. It's one of those interesting days, actually, because there's a bit of discombobulation with treasuries, equities, and we're back to a risk-on, risk-off sentiment. The US dollar has rallied through the roof against most pairs, right? It's a really good sign. I mean, we've been waiting for this extensive move for some time. So I know a lot of traders were balked about this. Kiwi had already gone early in the New Zealand day yesterday with the announcement from the Kiwi government about taxes on housing market to cool that market down. Aussie took some time to catch up. Sterling's ready. It's primed for a big move lower. And we finally got Euro down to 118.50, the dollar index up. Well, the dollar is up. Like, you check out the dollar yen though, it just does its own thing, right? It's mixed between a safe haven and just doing whatever's going on. Okay, so that tells me there's a bit of an issue between strong dollar and a bit of a safe haven trade at the moment. So you might want to sort of keep an eye on that as we sort of go forward. If anything, you come back over and just sort of check the nervous points of the market. The volatility index has jumped up a little bit. Right, the market's a little bit concerned. I wouldn't be surprised, especially with those moving equity markets. Tell us a bit of a story. But the main story for me is these. So the 10 years and the long dated bonds, treasury bonds, are lower. Right, you look at the price here. The price is up. Price goes up. Yield falls. Right, so if the yield falls, equity should rally, but they haven't. They've been hammered. So this is going to be a bit of a tricky one because the market is waiting for Fed Chairman Powell and Janet Yellen to come out and start talking about what the plan is and get their thoughts on the treasury yields. Because as I said, yields going up, treasury yields, that's great, good for the dollar, but it's going to be bad for different components of the economy, and they've got to do something about it at some stage. So I haven't seen anything come out just yet, but it's going to be interesting from here. So we have a bit of it's like a dollar safe haven trade again, almost. We've got half of Europe going back into lockdowns with like the third, well, they're calling it the third wave, I think it is. And unfortunately, you can't see because these measures here, especially I say on the majors, at 5 p.m. New York, they roll over and they get reset for the new trade day, which is 5 minutes and 1 second past New York. That's the start of the new trade day, and these settings are reset. So you can't see the big moves here on the major currencies just at the moment. But as I was just showing on the charts, big dollar day, right? This to me is, we're back into the groove here. The problem has been in the past, we have these big down days in equities and then it bounces straight back. But right now, understand where direction's coming from. The treasuries, the yields are lower, okay, and the dollar's higher. So that connection between those two components is off. I would be watching very closely the equity markets and thinking of the risk on, risk off profile that creates for the major currency pairs. So equities down, okay, US dollar up. That's all we're sort of thinking of just at the moment. And if that reverses, obviously the reverse will happen. As we go through the Asian day, keep a very close eye on the US equity futures. That's going to give us the lead into where that North American session should open up. If they continue to the downside, well, that should impact the major pairs a little bit more prominently. So coming back to those, now, if you've just sort of woken up and you're coming back to the markets and you're looking for opportunities, well, you've just generally missed it, right? Because you've got all these levels where it's broken down through, and you can see the price action around these trend lines. It's thick, right? And that's pretty good because that means there's a lot of volume going through, and these moves aren't just like knee-jerk reactions. This is the real move. What we have seen in the past is we get these moves coming up. You can sort of see dollar CAD there as well, sort of coming back to test 125.10, oil down at $57. You got to be thinking, dollar CAD would be a hell of a lot higher had the sort of tension around the CAD, the oil, the dollar all been a little bit more generic. I can see dollar CAD up another 100 points. I can see euro down another 100, sterling down 100, Aussie down another 100, and Kiwi down below 70, the figure at least, right? But how do we get in? Well, what you got to do is, if you aren't in the trade, you can potentially go in with a small trade, but I'd be looking for retracements back towards the trend lines that you can see at the moment. And you know what? Some of these currency pairs, it's not exactly going to, like Kiwi's not exactly going to rally 120 points back to 71.40 to get you into the trade. So with some of these pairs, right, we're going to see how this thing plays out, but it looks like a bit more of a consistent dollar play. Of course, Janet Yellen and Richard Powell could change the sentiment on this very quickly. But right now, I would be looking for opportunities to get into the dollar trade on retracements, or even start averaging in with smaller trades to get into the opportunity. And, you know, this is one of those things. You sit there and you wait for these opportunities to build. They can often happen when you're not in front of the screens. Let me just come back over to the my risk page. So you've just got to be patient. If you've missed it, you've missed it, right? You look at the, well, once again, these graphics have reset. So we miss a bit of the color visual of the dollar rallying and the other dollar block falling. But just keep an eye on, say, the FX Market Insight page, because this is where you can sort of see what's happening to commodities. Obviously, all of those have been hammered. You've got the risk on, risk off pairs. As I said, that's just been reset, so it doesn't really make a lot of sense. Keep an eye on the safe havens. Everything's in play at the moment, and the US equity futures or US equities, but US equity futures will be driving this from just generally through the Asian and European sessions. Yeah, that's pretty much it. Oh, sorry, I was just going to say, like, and don't forget, check your daily charts, right? I've got the majors here on the daily charts. You know, as I was saying this about a week ago after the Fed, the long-term trends hadn't changed, right? So there was no reason to get overly excited. As it is right now, we've got some pairs here, right? So the dollar's going up. Looking at your long-term charts, sterling is right on a level here. Dollar CAD is very close to it as well. And Aussie and Kiwi have already broken down. So to me, looking at this, it's sterling and dollar CAD are probably the two pairs you need to be focusing on. Okay. All right, guys. That's pretty much it from me. Great sort of day to see things moving around and give you guys a real good look at how normal market conditions work. So keep an eye on some of the data that's coming out. Now, when the currencies are moving clearly like they are, if we do have data which is moving up, or like the Aussie, right? I was going to say, just losing my train of thought. If the Aussie's going down and we have some medium sort of high impacting data, if that data is actually weak, the currencies will run with that data, whereas otherwise they usually wouldn't if there was no sort of general momentum. So just keep an eye on what's coming through the market. Let me just scroll down here. Car regos, I wouldn't worry about that. UK CPI would be one to keep a close eye on, and also some of the PMI data out of Europe. This is a great day to be getting really weak European data, or even in fact, if it was slightly stronger, we might see Euro pop a little bit, give us a chance to sell Euro at better levels. All right, guys, plenty to play for. We're in full whack now. This is where all your knowledge and understanding of the markets comes into play. Remember your capital management, trade plans. Let's not get all anxious about missing the opportunity. If you've missed these moves, put it behind you. Look forward to the next opportunity where we get the next opportunity coming up. There's nothing more you can do with that. All right, guys, have a good trade day. Cheerio.